Here's the problem. According to the Federal Highway Administration, almost 3 million people are injured in auto accidents every year. And according to the American Cancer Society, almost 3,000 Americans are diagnosed with cancer every day. And if you are one of those taken into a hospital emergency room with a serious injury from an accident, or one of those diagnosed with a critical illness like cancer, your medical bills, including surgery and hospitalization, or radiation treatments and chemotherapy, could easily amount to $300,000, $400,000, even $500,000. And if you don't have health insurance, you'll be required to personally guarantee payment of all your expenses. And if you can't pay your medical bills, the doctors, hospitals, labs, and therapists will turn you over to collections, where a legal judgment will levy your income, your salary or wages, for as long as it takes to pay off your medical debts. That's why half of all personal bankruptcies are the result of a major illness or injury. So, what's the solution? Major medical insurance coverage. It's affordable health insurance that protects you against financially devastating expenses, like diagnostics, surgery, and hospitalization, or radiation treatments and chemotherapy that can last for months or even years and cost hundreds of thousands of dollars. That's why it's affordable, because it only pays out for a critical illness or injury when your medical expenses exceed $5,000 or $10,000 in any one year. So, with major medical coverage, you pay for the small expenses yourself and let the insurance company pay for the large expenses, like you do with your auto insurance or homeowners coverage. After all, you don't expect your auto insurance to pay for routine maintenance like oil changes, tune-ups, tires, or brakes, and you don't expect your homeowner's insurance to pay for minor home repairs either. So, why would you expect your health insurance to pay for minor medical expenses, like a sprained wrist or a flu vaccination, expenses that rarely exceed a few $100s a year? Here's how it works. You choose a deductible and co-payment maximum based on what you can afford to pay out of your savings or with a credit card, like $5,000 or $6,000. And that would be the maximum share of covered expenses you would need to pay. For example, if you were to choose a $2,000 deductible with a 20% co-payment on the first $10,000, and you are diagnosed with a serious illness like cancer, or you are taken into a hospital emergency room with a critical injury from an auto accident, you would pay both the deductible and the co-payment, while your insurance would pay all of the other covered charges. So even if your medical expenses amounted to $400,000 with major medical coverage, you would pay only $4,000, which is just 1% of the covered charges. But without major medical insurance, you would be paying off 100% of these medical bills out of your monthly paychecks for many years to come. Or you would file for bankruptcy and sell off your assets to pay off your medical debts. That's why the U.S. Department of Health and Human Services estimates that as many as 10 million Americans are already covered by major medical insurance, and as many as 50 million more will be switching to major medical coverage over the next few years. So ask yourself this: does it make sense to go without insurance coverage and risk being denied critical life-saving medical care because you cannot pay for it? Does it make sense to risk bankruptcy for the sake of saving a few dollars every month? Or does it make better sense to purchase major medical insurance coverage that will assure you of access to the best medical care available, that will protect you and your family against the prohibitive cost of a critical illness or injury? After all, wouldn't you rather be safe than be sorry?